You are listening to Revealing Real Estate Podcast, where we dive into getting over your fear of taking risk in real estate and making money while you sleep. I'm Nico Pedizano, your host and real estate guru with over 20 years of experience. It's time to get real. Welcome back to the show, Revealing Real Estate. Today we are going to be having a gentleman who's been on the show before. He's been on a few times, but with high demand and of course, with his knowledge base in the commercial, industrial, and land development space, it was important that we bring him, this gentleman back, who's by the name of Paul Miceli. He's the CEO of Vanguard Realty.
How you doing, Nick?
Hey, Paul. Welcome back to the show. Thanks for coming on again. You've been a wonderful guest on the show. We've talked a lot about the commercial space and the industrial space quite often within the show itself, and to make our viewers or our listeners understand, about that space if they're not so well versed in it, because majority of the people go for the simple, condo pre-construction flips, get that ownership of that property and then rent it out of a house. But in these markets right now, what we're finding is that there's a lot of investors that are currently sitting on the sidelines, liquid with some cash, not really transacting within the business right now because the rates that are currently out there within the market and the amount of payment, that money that you got to put down on it, most of the time are cash flow negative, and they're not generating any income for themselves. And what I want to talk about are there essential ways of pivoting in these times where maybe we got to look at different sectors within the market. Maybe for my clientele and our database itself is, can we educate people to say, hey, listen, it's not about stopping the investment. Maybe it's diversing your investment portfolio. And for somebody, even for myself, who's heavily leveraged on the residential space, it's something now I'm considering to say, hey, let me move on to the commercial space because of a lot of issues as well that we deal with on the residential side of the landlord and tenant boards that we normally you normally don't see on the commercial space itself. And then we're also going to talk about what I want to talk about with you is the land aspect on it and what you're seeing, because you have a big team that specializes in finding developers land, and that's kind of your job. And they'll come to guys like you and say, hey, we're looking for so many acres. What is it that you're finding in that space when you're trying to find properties for sale for developers today? And what's it like out there right now?
We've still had a reasonably good year on selling land. People, if you listen to the news these days, there's a lot of doom and gloom, and things are really slowing down. And we really just haven't seen that. Like we've made several land deals with our land services group. From January to present day, we've done reasonably well. It wasn't maybe the best year we've ever had, but it definitely wasn't the worst year either. So we're finding it's a mediocre year. We are definitely seeing some price adjustments. The price isn't going down, way down, but there is adjustments in the price, and we're definitely seeing a change in the terms. So let me give you a little background on that. Typically, a couple years back, especially during the pandemic, when the real estate market was very hot and interest rates were very low, we found a lot of cash buyers coming out of the woodwork and buying properties and kind of paying them all up front because they were making so much money in their other businesses.
Yeah, or finding their own lending from different institutions.
Or going to their lending institution, which had a low rate, and making a deal with them. What we're seeing now is the rate is much higher because land also gets put under that commercial type of lending thing.
Correct.
So it's a little more than a residential mortgage.
It's a little bit more diverse for sure. Interest rates are a little bit higher on that aspect.
Interest rates are a little higher.
Yep.
So what we're seeing now is a term called VTB mortgages. Vendor take-back mortgages are what is happening in our world. We're seeing a lot of people where they typically, we'll just use a number. They buy a $10 million farm. They might come up with $4 million. And then the $6 million, they'll run it over a 3 to 5 year period on a fixed rate of, say, 4% versus 7%.
Right. Yeah.
So that's the type of deals that we're seeing. We are seeing, and what we're finding is if you want to keep that acre price, then the financing price has to change. So we can't use what the banks fight at and the Bank of Canada lending rates are. We need to go back to where those rates were probably a couple years ago.
Right.
And then we seem to be getting very close to the same numbers.
When you're looking for land for your developers, are you finding that the properties that they're looking for are lands that are probably most likely in the primary plan of development where it's ready to go land 3 to 5 years away? Are most of the players in the game looking for land that's 10 to 20 years out in the game, knowing that there's a lot of upside there instead of buying something that's going to pay a little bit more expensive now?
Well, that's kind of a loaded question, because the guy that needs the land today is usually a developer, right? That he's going to buy, let's say, 1 to 3 year land. A lot of condo builders do this. Even residential low-rise builders do that. They'll pay the price knowing that they can sell at a certain dollar value. So the investor, though, isn't really that guy. That's a guy that's going to buy the property and use it. The guys that we find, or we're dealing with several of these type of guys, they're buying stuff 10, 15, 20 years away. So, in our world, we call it land banking. They're banking land for a future use. Some are just touching around secondary plans, but they're not yet in secondary plans.
So just to make our viewers understand, between a primary plan of approval versus a secondary plan of approval, Paul, you maybe want to, you probably got a little bit better, you're better versed in this, but from my understanding, a primary plan of approval is something that is going to take place within 5-10 years of development. And then a secondary plan of approval, probably looking between 15 to 30 years of development.
The best way to put it really is a primary plan is
ready to go.
It's pretty well set on what's going to happen.
Right.
Maybe some minor
set with who?
Set with the city, set with the community, it's part of a community plan that usually doesn't change very much.
And how do you get that information?
Through planning departments with your cities. A lot of it's online now. We have different programs that we use that help with getting us that type of information. So when we look at a piece of land, we know where it sits, kind of, right? But again, we're doing a lot of stuff that is outside of those plans. And because what the reality is, a lot of that land's already spoken for. It doesn't trade hands. Guys that bought that land, look at it this way. They bought that land 10 years ago. Now they've sat with it. They've got it to a really good place. A lot of them that don't have to sell it, why would they sell it? They're going to probably go all the way with it, right? Either take it.
Sometimes, listen.
If you're in that business.
If you're in that business. But if you're not in that business and you just did some land banking as an investor and you held your money there, which is very tough on that perspective to get financing on, unless there's a dwelling on that property, because most banks, for the smaller player in the game, won't even finance you, and then you have to go to private lending or, like you said, structure a VTB on that.
Right.
And that's where you got to get creative within the market itself to start doing that. But a lot of these guys, to get it from the ground up, there's a lot of money that needs to be invested, right?
Absolutely, especially if you're going to engage planners, you're going to engage block plans, you're going to you got to pay servicing costs,
development charges with the city, which is really
they only go up. They only seem to go up.
Well, that's why the house of pricing has gone through the roof, is because these charges that are implemented to these developers continue to rise, and
it just gets passed on to
consumers.
It's got to go somewhere, right? And
it's got to go somewhere, correct?
And everyone, kind of blames their local builder, but really, he's not really to blame, because he's incurring all those costs, so he has to turn those costs over to somewhere else, right?
I remember back early on, for people that don't know, me and Paul started, when I first got licensed, I actually started with Paul's brokerage back in the day. This was my second year within business. Paul introduced me to the business of real estate. And from there, it was just kind of uphill for both of us in many different perspectives. He specialized in one sector of the business, and I specialize in a different. And I think as real estate agents that are listening to this show, specializing is very key, and it's a huge component. I'm sure you can attest to that.
Absolutely.
But I remember when we first got in, you were a big land component guy, because you were dealing with a lot of big developers back then in the time, and me and you collectively were studying the process of it. And I remember me and you would go, back then it wasn't even online. We had to go to the city, remember?
Actually, had to physically go, meet a planner, wait for him to come out, then ask for the maps. Remember, then they charge you for the photocopies.
Exactly, remember that?
Yeah.
And those what we would ask for was the primary plan of approval. So what happens is the city will set up projections of what they want for development in certain sectors or certain cities within their community of York region, and they'll say, okay, well, this area is going to be considered industrial, this area is going to be considered residential, this area is going to be considered commercial, and then we're able to put an evaluation on a per acre sale price for that value of that property, so that if we found a landowner that wanted to sell that property, we would know how to price that out, right? Because residential may sell more than industrial. Industrial may sell more than commercial.
Because you just actually
triggered something.
Yeah, you triggered something because when we started years ago, residential land was always more. I don't know if you remember this, but it was always way more money than employment.
Why?
lands.
Because it was density, right? We were able to put more units on that specific acreage of land that you were going to be able to.
But I'm going to tell you,
be profitable.
It's not necessarily the case today.
It's not, right? Because the cost of building a house today now is superseded the cost of building an industrial building today.
And what we're seeing is industrial land has caught up. It really has, especially industrial. You know, not retail maybe, or not office, but industrial land for sure has really caught up. We have a big shortage of properties still, even though the market has kind of slowed down and things are a little different maybe than they were a year ago out there. We are still at a shortage of industrial properties. Vacancy rates are still below 1%. So, you know, you don't have anybody to move. You can't move guys around. Like, you can't move a guy from 10,000 square feet to 20,000 feet because you don't have it.
And you want to talk about shortage supply in the residential market to support all this immigration, but how about the shortage supply in the industrial space? How many new developments are you really working on? Do you have any new projects that you're working on?
Yeah, actually, you know what? We are bringing a new industrial condo site to the market. So just for those guys that don't know what an industrial condo is, an industrial condo is basically an industrial building that is all separated under different ownership titles for different square footages. So we're bringing a condo site to the market. We're launching, our tentative date is November 16th, and we're going to be selling anywhere from 1,000 or 900 square foot units to 3,000 square foot units. Our pricing hasn't been set yet, so we're waiting for some pricing and stuff like that. But we're in a very good Vaughan location, highway exposure.
When's the release going to take place?
November 16th is, I think, we're going to
of this year.
Of this year, yeah.
Yeah, and
we already have a list. You know, we're getting so much activity on that because that's a good space to be in. Small business,
lack of supply. It's all about supply and demand,
no supply.
For sure.
There's
and location works.
The location's great. There's no supply in that space, right? So that we think is going to do very well. Now, other stuff that we're finding, talk about assembly work that we do, like with condo assembly with land. That isn't as busy as it was a year ago because we find that a lot of those projects aren't coming to the market as fast as we thought they would. You know, it's kind of
because of these costs that are associated to developing even these condominiums.
And time
and the time frame that you got up front for it, and the cost of the money today becomes very expensive because you got to remember, if developers at the end of the day are not getting a discount on the rates that they're going to be paying, even on a VTB, if they do find structural deals on a VTB on it, but when you're dealing with institutions as well, they're still paying that commercial rate to help development, and then you need. These guys don't come with all their cash to build these condos. These guys get financing to develop these condos. Yeah. When it becomes that expensive, the end consumer is still going to absorb the cost of those rates.
Yeah, because there's that fine line between what the consumer can actually pay and what the market can handle and what it's going to be.
Exactly.
Right? So, and that's where I think that we're at in certain markets. In certain markets, I think we're at that point, right? Where
it's not worth it for them right now to launch and go up with these projects because it's too risky.
Yeah, that's something. However, we do have, I think, an immigration problem where we need a lot of places, and we have a lot of bodies coming into the city every year.
Yeah.
We need somewhere to put them, right?
Yeah.
So
yeah,
it's going to be.
Yeah, it's interesting to see what's going to take place. You know, I think they're very. We're in a market right now that's very volatile. I think there's a lot of confusion. I think there's a lot of fear, and I think there's a lot of the speculators that once were there, buying floors are not there anymore on the residential side of things. I like the commercial space aspect on it to really look at maybe allowing my investors that I deal with more on the residential, or heavily residential, to invest into that commercial project or in the industrial project that you got going on, just for the reason is that if somebody bought that property itself, are you cash flow positive by the time you lease it out, or is this more set up for an end user?
No. So you know what? That's a great question. We believe that we have a product that we're launching that works for both.
Oh, that's great.
Industrial rents have significantly gone up in the last 3 to 5 years. I think you know that. I know you dabble in it once in a while.
I just did one. I did one industrial building in Vaughan. I think the landlord was getting $9-10. We hit $21.
Right. So, a lot of times you're doubling up or even more than, 2.5 times of where you were. So that is, in the smaller space, it's even more significant. So, when we started 5 years ago in this type of space, we may have gotten let's say $7.50 a square foot. In some cases, we're hitting $25, $26 a square foot net in those smaller spaces.
Yeah.
Right? Because it's a monthly payment. So whatever that business can sustain and to make that monthly payment, if you can get it in that range, they'll pay it, right?
Right.
So that's where we're getting with that. So we believe that this and for a user, guys that are out paying that rent, even though the mortgage rates aren't what they were, we are working with some different financial institutions as well, like BDC, Business Development Bank of Canada, which helps small business, helps them own their own products. So we are working with them as well on this project. So we don't think the rates are going to stay there forever. Like, we definitely think that the rates are definitely going to come down at some point, whether it's a year or 2 years from now. We think the rates were definitely
myself as well. I attest to that, and I think that when these rates do come back down, we're going to see this market flourish again.
Absolutely.
In multiple, I'll speak on the residential side of things. I see a 10 to 15% hike in a matter of 1 quarter, and I think that's going to happen real fast. I think there will be opportunities in both sectors. That people will be able to actually start making sure, if they wanted to create a different side business, or they wanted a little bit more to attain an aspect of becoming an investor and becoming a landlord. Commercial industrial right now, office space is not really. I wouldn't recommend office space rentals.
Yeah, that definitely is
I think that's
a harder sector. Yeah, that was depending where. Like, we're finding suburban office is still very good. We're finding downtown core office to have a lot of vacancy, and the reality is people just don't want to go back to work downtown.
My opinion is that those will be reconverted into apartments.
Well, there is places in the U.S. that have done those very conversions where they keep some office and some residential combined.
And do you think COVID had something to do with that?
Absolutely. That's a pure quote, because pre-COVID. Most of those buildings were at 90% occupied. It was always difficult to get office space.
And I think people became very accustomed to working from home.
Right.
They don't want to go back to work.
Some of those jobs never did go back.
Employers are saying, "Hey, you're just as productive at home as you are,
right?
Coming into the office, and we have all this rental space for you that we really don't need. Then we can convert into rental space or generate some income from it, or find different creative ways to."
I think you're going to see that. That is something that has been talked about. I know that it's some of the guys that I've talked about it with. It is a very expensive conversion to get to that. But I think as values in Toronto are so much more expensive, there's going to be a point in time where it actually does really work.
Yeah.
And you're going to see that, right?
Yeah. I just want to spin back to what we're talking about, because we're jumping. We have a lot. Me and you can always just rhyme off on industrial, and we can sit here for hours. This is what we and Paul do sometimes when we're eating. We just talk real estate, and I think our wives once in a while tell us to shut up and shut it down. But with when I go back to the game of when I first started, and I want to go back because I like telling a little bit about stories, and stories are important so people understand, how things have evolved. And when I first started out, and I was going back to that story in the land game, we went to the cities. We used to find out what properties were zoned in the primary plan. Once we looked at the zoning and say, okay, we have developers that are looking for more residential. We'll look at, okay, who are the landowners inside that residential area? What hasn't been bought up yet, because we know who the players were within the game, especially in Vaughan, and what's been untouched, and who are still what's the word I'm looking for? I guess
they're
farmers or
mom and pop, or not institutional buyers, or builders, or the people that are bringing it to the next stage.
Correct.
So they're very easy to distinguish who's who.
Exactly. So we're looking for land that's not been touched yet, right? And what our jobs were is to go and solicit those owners and try to find out ways to see if, hey, would you guys, based on the current market value, on a cost per acre, depending on, and actually this is a very big terminology as well, is how much land is usable. Right. So people have to understand that if majority of the time, if you got 100 acres of developable land, but 50 acres of that is protected by conservation, or there's water, or there's a river running through the property,
greenbelt,
there's greenbelt on that land, and only 50 acres are usable, a developer is only going to be paying you for what is actually usable, and everything else of that component is pretty much just then you can sell it to developers as premium ravine lots or somewhat. So that was a big part of our game. Is the game, and that was 20 years ago. Is it still pretty similar today?
Yeah, you know what? We have a little different today than we had 20 years ago.
Because I don't do it no more. I used to do it, and people have to understand, man. In that land game, sorry, Paul.
No problem.
I want you to get back to that point. But I remember in that game, me and you was like, okay, we used to have our map of our landowners group and go knock on them, and then we think we hit one, and then all of a sudden it was like, shit, we can't make a deal because the land was too expensive. So to really make, excuse the expression, but to make the shit stick on the wall, you had to go through 10 land transactions before you actually closed one. And you do one or two a year back then. The commission checks were pretty good.
Enjoying this episode? Subscribe to our channel and leave us a comment down below to let us know what you want to learn next. Make sure you're following our Instagram and TikTok to stay up to date on our new episodes every Friday.
And that part of it's still the same. If you hit a couple of good ones, absolutely. There's definitely,
knock them out of the
as
park.
A broker, there's very good money in it.
But you got to hit 10 to hit one sometimes, right?
And the conditional periods with land are significantly longer than they are with selling, a residential house or an industrial building, or sometimes land conditions drag on for 6 months. Right?
Yeah, because these developers have performance, man. They'll type in all of a
sudden.
One
thing we do have different is we do have programs now which give us, we were always guesstimating on usable land versus non-usable land. I think you remember that, right?
Yeah.
Now we have some very good programs that they give us better discussionary lines, and and our predictions are much closer than what they were.
Right.
Right. And a lot of guys today, they don't, the prices of land are significantly more than they were 20 years ago. So a lot of times people engage a planner immediately during the conditional period. So they want to know exactly what they're buying, exactly how much land is usable versus non-usable, and exactly what it's going to be when it's ready to go.
So I guess you're working yourself directly, or your team is working with planners a lot.
Absolutely.
Right? So if you have a farmer or somebody who's owned this land within their family and they got 100 acres, but they don't know how much of that land is actually usable. So let's speak to the person who actually owns a piece of property today and is looking maybe to take some chips off the table in our business, right? But they don't know what the value of that land is. They're going to call specialty guys like yourself or myself to go in there and kind of specialize on this.
Yeah.
But they don't know what's planned, and everybody wants to maximize. And our job is to make sure that we want to help people through that process and to make them as much money as they can. At the end game for us is, of course, to make sure that we put as much money in their pocket as possible. That's what we do. We build the relationships, right? We put buyer and seller together.
Absolutely.
How does somebody figure out what their land is valued at in most cases?
the way I would do it is simple. The first thing I would do is definitely engage a real estate professional. That's the first step. Why? Because it doesn't cost them anything. Right off the bat, they meet with a specialist in their market. And usually from signage, from the internet, it's very easy to find who that specialist is in your current area, usually, right?
Of course.
So I would definitely go that route. And then I would ask that person to, give us some kind of a CMA, a comparative market analysis of what's traded, what's sold, how long ago, that kind of thing. And that's going to give you some kind of an indication. And then depending on how far you want to go with it, the next steps would be to engage a planner. And okay, what's it going to be? How much density am I going to get? Like, what are the things that are going to happen from this point in the next 5 years?
Correct.
So, it depends how far you want to go with it, really.
Yeah, if somebody's just
And
in the
what you wanna
process
spend.
on it, right? I would definitely look online today, which we didn't have before,
Yeah.
and just look at go to the city website, City of Vaughan website, if you're based in Vaughan, or you can be anywhere, but just go to your local municipality, and you can look online and type in primary plan of approval, and in that primary plan of approval, it's going to tell you if your land is still ways away in the secondary land, in which definitely decreases the value of your property versus being in the primary plan. And secondly, what your land is zoned for. So if you're still zoned agricultural, but the future use of that in 20 years from now will be residential, there is value to that. It's just not going to be as valuable if your property was zoned residential today and ready to go to develop lots on there, or in commercial industrial lots on
Yeah,
there.
I mean, you're closer, like you said before, 1 to 3 years away is a totally different price range.
Correct.
Right?
And we're just trying to make people understand the terminology
But if
with that language.
my belief, if you had land like that, you'd know it, because there'd be a lot of guys calling you about it, right?
Very true. Very true. But I did get a request a couple of weeks back, and they have a piece of property located in Vaughan. It's not a very big parcel. I think it's 2 or 3 acres. But they and real estate agents are consistently knocking on their door, big guys in your game, and wanting to know if they'd be interested in selling their property because they have potential buyers for it. And one of the these people have been clients of mine for many years, and they asked me, well, what do I think the land is worth? And it's hard for me to indicate what value is until I can really do some research and finding out what the true zoning is for that particular property, and when you're going to be able to develop with that land, right? And I think people need to understand that is the first most critical part for us as real estate agents. And that's why you hire us, is to make sure that we're not going to try to leave any money off the table for you.
Well,
right?
what we're also seeing, Nick, years ago, lots were lots and that was it. But what we're seeing now is, especially places like Vaughan, where density is becoming a very big thing. Like where nice corners where maybe we used to put retail plazas are now going to be mid-rise buildings. So
Right.
So if you have and I'm seeing it. There's parcels along Weston Road, for instance, in Vaughan, north of Major Mac, where you never thought, a lot of that's going to be high density stuff coming forward.
Stacked towns.
Yeah.
Which we've never seen before.
Nobody had that before.
Yeah.
So, that's why, you'd be really selling yourself short if you don't know what you have before you sell it.
You make a great point. And I think today, even with the cost of land, and we're going to go back to the VTB subject on this, is that a lot of developers too as well, when they're buying these properties, and it's very common, sometimes these lands can get up to the millions of dollars, and I've seen transactions up to 100 million,
Absolutely.
200 million, depending on where it is and how much land we got. A lot of times on these VTBs, Paul, that these developers ask for is that they want interest free for about 2 years on it, right? So they give you 50% down cash now.
Right.
They'll give you the value of the land that you are asking for, but they want interest free on it. Have you seen any VTBs lately with interest free?
Absolutely.
Yeah.
We have seen it within the first 24 months, 12 to 24 months. We have seen that. But the reality is, in my opinion, it's all math, right? If the math works, so he's either getting it on the number per acre, or he's getting
he's
it
gonna
in
get
the
on
back
interest.
end with the
Yeah.
interest.
Yeah.
So at the end of the day, it's six half dozen of another. Really, it is what it is.
Same thing when you're buying a used car, right?
You know, yeah, it's really honestly, it's the seller's perception. I think some guys want to say that they got a big number, and they want to show that number. So if they take the financing out for 2 years, the guy gave him a big number, but he's calculating, hey, it would have cost me so much for that 2 years, and that's all in the price, right?
Right.
So it's all the way you slice it.
Yeah,
really.
it's all the way you slice it. But there's a lot of
But I am seeing that. Absolutely.
Yeah.
We have seen that. We've seen that, especially with, builders like to buy time all the time.
Yeah.
I think they that's one thing they like because they're always trying to time things perfectly. And that's not easy to do. Let's face it. It really isn't. They want to open sales offices, then they want to sell their product, and then they got to put their roads and their sewers. By the time it's all finished, a lot can happen.
inflation could rise, and now the cost of lumber is increased,
Right.
and all of a sudden, all your plumbing and electrical and everything, your masonry work today, you can't find guys to go do masonry work anymore.
And it keeps changing.
And it keeps changing.
Keeps
right?
changing,
So what you think your charges were today when you bought that land, because the developers are only going to be basing their prices on what the value of that house is going to be able to get sold for today.
Right.
They ain't going to be basing that, in 4 years from now, that value of that house is going to rise to this. No, they don't.
No.
It doesn't work that way.
No.
If they know that they can sell a townhouse today for $1 million, their pro forma needs to be shown based on me selling that house today, even though it takes me 3 years to build that house, because things do change. Markets can go down. Markets can go up, right? The cost of
Absolutely.
materials change on a constant basis. It's a very risky game too, as well. For people to understand that there are developers out there that currently right now, hey, listen, their profitability margins are big, right? But there's a lot of big undertaking that they also take on that perspective. Wouldn't you agree?
The guy, yeah, absolutely, I agree. And the ones that are even more difficult to predict is the guys that are building high-rise building because you're so far out by the I think
Concrete,
like
man.
I know I've bought some condos in my life at friends and family events.
Yeah.
And by the time you buy it, and by the time you actually get that condo in your hands, 5 to 7 years have gone by sometimes.
Yes.
And these guys have put a price on something that got built several years later. To me, that's a very difficult thing to do. I don't know actually how they do it.
Yeah. Well, I think it's going to be adjusted in what they pay for that land today, right?
Well,
And
the land starts with the land for sure, but building costs.
If they know, I think if you're selling a condo today at $1,400 a square foot, they're going to probably based on that selling factor being $1,100 a square foot. They have to leave those margins in play.
And they got to hope everything works out for them in between. So it's not as
Correct.
easy as everyone makes it sound that the builder's making all kinds of money all the time.
And that's why I wanted to have you on to talk about this, right?
It's not. It's, I know a lot of them, developers, builders, on a personal level, business level, and everybody always puts the onus that, they're making all the money. That isn't the case all the time.
Correct. Things change with them. Cities, municipalities. I remember when I first started on the business 20 years ago, DC charges were at $30,000 to $40,000 a door.
Right.
I'm hearing in Vaughan, they're hitting close to $100,000 a door, if I'm not mistaken. Right? So,
and you got to pay them all up front when you go get your permits.
Yeah. And they want an LC for the roads and the servicing that you got to do up there. And if you don't do it right, they're going to pull from that LC. You got to put a guarantee down with the city through that process. It's an important part. And then you got that cost sharing obligation, because if you have other landowners that are adjacent to you that are developing their parcels, collectively, the city wants you guys to do it all together and form a group so that you guys, and it's cheaper for them, to everybody contribute to that cost sharing obligation, where you're going to put schools and parks and the roads
and pay for it,
and you got to pay for it, right?
Of course.
And then you have developers that have, one guy has 100 acres, the other guy has 50 acres, and the other guy has 20 acres. Well, why should the 100-acre guy give up more of his land for the park dedication? Because most likely it's going to end up in his property. He's going to say, well, I'm losing lots on my property because I got to build a park and a school.
This is why secondary plans take so much time.
Yeah, that's why secondary plans take so much time.
Because by the time everybody finally agrees, 5 years has gone by.
Yes.
A lot of times.
Yes.
Right? That's why.
Yeah, man. So it's one of those things that there's a lot of moving parts to the land side, and you have a wonderful team behind you that helps you through the process. A lot of times, Paul and I controverse because as real estate agents, which I'm not really seeing in the new gen of realtors. You know, we're two generations in right now, and I think the generation that's coming up as realtors really need to understand that there has to be some more
more of a
cooperation, right? Within each other,
too,
right? How many times me and Paul, we're going golfing together and say, hey, listen, Nick, I just got this piece. I got a seller who's looking to sell this. You got a buyer that's looking for it. Or, hey, Paul, I got this piece. You know, sometimes they hit, sometimes they don't. Maybe sometimes we can put people together. But I don't see enough of that happening with the new gen of real estate.
And I don't understand why. You know, and because you know we have this within our community too. Right, within you know, as markets tighten up and product is less, everybody kind of keeps everything close to their hip and they don't want to tell anybody anything. But I got to tell you, you know, I never ran my business that way. I always said, you know what, let's get this deal done. Let's move on to the next one. So I'm a big guy about cooperating with other brokers.
Because at the end of the day, it's about you're representing your client.
And the truth is,
if somebody's trying to sell something, you want to make sure that you open up every door and every avenue to expose that property. No matter what the outcome is, how you got to share it.
Money's a beautiful thing. It's easy to split, right? Mm-hmm. So if that was always my logic with working with other brokers. You know, make your deal, move on, and go make another one.
Right.
I
used to love. I remember early on in the days, love coming into the office because every day was a new day for me. Right. I didn't know what you were going to come up with today, and you know how I was going to match that client to that specific deal or that house that you had coming on the market. And right now, it's like everything's on.
The pandemic's changed our businesses a little bit too. Absolutely,
exactly.
You know, when we started many years ago, I remember sitting in the cafeteria section or the kitchen section of the office, and we'd have a coffee, and we'd just be changing information, right?
And it's simple.
How many times did we make deals doing
100%. Oh, hey, Paul, remember what that deal sold? Look what that deal just went down for. Now we've already, in our minds, we're able to portray what the next deal would sell for, right? Because that set the new precedent of what land was worth, right? Or what that house was worth. Right now, it's embedded in my mind. And I think real estate agents today, we used to go out. When I started specializing in the residential game, many times when the house got listed, I would get in my car by myself, call in to book an inspection on that property, to view that property. Right. So I knew specifically what that property entailed so that if I did
show a client,
or I had a buyer that came up to the table and said, hey, I got this perfect house. I've been inside the house. It's beautiful. It's great.
Right. You know it.
It ain't happening.
No, it isn't. You know, and that is honestly a sad thing, I think, on our trade, on our community.
It takes too much time and people.
Yeah, but
and
you know what?
now things.
I got to tell you, for anybody watching today, the best thing I can tell you, spend time in your offices with older brokers or brokers that have some more experience. You're only going to learn from it. You're only going to get. You're not wasting time. Believe me, you're not. But today,
the mentorship that you're going to get and the guidance from them,
and you can't do that over the phone or from a FaceTime call or a Skype call or whatever it is.
Yeah.
I think this is still a personal business, and you have to make it personal. Do you agree with that? I
100%. You know, for us, it's all about the relationship and the relationship building.
Relationship game,
for us, it's a simple mathematic, right? Have conversations. The more conversations you'll have, the more contracts you're going to get. The more contracts you get, the more deals you do, and the more commissions you make. It's just part of the process, right?
Yeah.
Simplify. Yeah, there's a big marketing, podcasting, social media, a lot, especially in my sector. A little different.
Yeah,
than
ours
your
is a little
sector.
different, but we still, you know.
But you do now. It's becoming more.
But how many guys take that past client out golfing for 5 hours or out for lunch? Or it's the little things that build the relationships, and the guy thinks about you going forward. I can't stress that enough with our people.
Yeah.
But you know how many are really doing it? You know, I don't think as many as they should be doing it. I definitely don't think as many.
Yeah, you know, it's just one of those things that sometimes I think with technology moving so rapidly and so fast, and now we got AI and you know, Chat GPT. I think people are going to stop even thinking for themselves.
Yeah, their way of communicating, the younger people's way of communicating, is different than the way we learned, right? It is.
It is. It is.
So it is what it is, right?
You know, now the social aspect's going to be on WhatsApp chat groups or messaging and stuff like that. Yeah. And a lot of stuff, like even with our team right now, and I find even after COVID that a lot of the agents now do work from home, right?
Yeah.
They don't come into the office as much, and I wish they did. And
Well, we're getting that for sure. In all our offices, we are getting the exact same thing.
There's
A lot of work.
down.
Well, the first thing is everybody set up a home office. So they were able to do whatever they were doing at our office, they're able to do from home.
They got a phone.
They
They're
got
able to use that. And nowadays, nobody has home.
Copiers,
Everybody's using their cell phones,
scanners,
right? Yeah.
all that stuff is there now,
Yeah.
right?
Yeah.
So they didn't have that before. So that's one, I think, reason. They've spent the money and they've opened this home office.
Yeah.
But, I'm still a believer, get into those offices, get going, get working again. That's going to help you.
Yeah. Anytime I'm slow, and guys like me and you, we talk about this all the time. When we're busy, we're playing mental games with ourselves. When we're slow, we're definitely playing more mental games with ourselves, right? Because we can never be slow. We always got to find when the thing is.
It's for
now
sure.
maybe a little bit. Us 22 years in business now is just like whatever comes, and for me it's just about enjoying and being happy every single day, first and foremost. And I think everything else, and really loving still what I do, because if you're a real estate agent listening to this, please just have fun with the business. Have fun every day. Enjoy it, because the more fun you have, the more passion you build in. The money will become a byproduct, right?
Oh, absolutely. And I always, which we had a tough time doing when we were younger, but you can't worry about things that are out of your control.
Yeah.
Stuff you can't control, you can't control.
Yeah.
But if you keep working hard every day and doing those same things, guaranteed it will pay off.
Yeah. Paul, this has been a lead up to another great show. This is our third show. I'm sure we're going to have you on again for sure. We always got so many things to talk about, but we
Thanks
only
very
got
much
so
for
much
having
time.
me again.
No problem. So we're excited to hear out this show. This is going to be fun. For those that didn't understand too much of the land component of it, now you do. If you have land that you are currently looking to sell, or you're an investor who wants to pivot right now and very heavily into the residential side of things, we definitely could give you a call. We'll have Paul's information posted on our Revealing Real Estate on Instagram and on YouTube, that if you have any questions for him, you can directly DM him, or you can just DM the OP team as well, and we'll be able to share that information. And as we said, we definitely are collectively looking to share with each other. So please reach out. We're always here to answer any questions you got. But Paul, thanks again for coming on the show.
Thanks, Nick.
No problem.
Thank you.
Looking to buy or sell? Call a team you can trust. Don't believe me? Our Google reviews say it all. Put us on your lawn, your house will be gone. TheOPteam.com.